just understanding these risk variables. You don't want to freely put your money in unless you understand this. I think this session on the Vinney Beau Show is really just an overview to open up your mind on how you should be thinking going in when you're going to put in $250,000, $500,000, $1 million, and you're basically hands off at that point. You're an LP, you're a limited partner, so you're really relying on that horse jockey, right? That horse jockey has won a lot of races, or maybe they're inexperienced. You've got to know what your risk variables are, because whenever there's risk, there's reward, meaning you can make way above average returns on these type of deals, but you got to know what you're getting into.
True, you said it so rightly. Beau, you're right. Syndication specific property. The syndication package is put together, PPM is put together, and the investors' money, the gains and the losses are based on one selected location, that asset class, that asset. Well, good morning, and good morning. This is Vinny and Beau Show. We've been doing it for many, many years now. Brother Beau is right there in Las Vegas, Henderson, and I'm here in the Bay Area. So excited to have this show today. Beau, we got a great show planned, don't we?
Yeah, today's topic is 10 essential questions to ask syndicators before investing. And this is going to be a Q&A show. I wrote up the questions, and we're going to see how Vinny responds, being a serial syndicator that's done close to 40 syndications, give or take. So I think this is a great show. I hear people wondering, like, okay, hey, I want to invest. How do I actually go about it? What should be my framework in mind? So this is a basic list. This is where you would want to probably start. You're going to want to go in more detail and look at the deals. And, sometimes some investors will actually drive and look at the properties or fly to the properties and say, okay, I see what I'm investing in.
Yes.
Most of them don't, right? But
yeah.
Really, we're going to start in. Can you give me kind of a grasp of what your investment strategy is today?
Totally, Beau. Actually, I've been in multifamily investing. I know I used to do single family homes. Some of you might know, follow me. And then I found that you can make legacy. You cannot have constantly coming, cash flows and all. So multifamily apartments. Multifamily is also like duplex, fourplex, eightplex, 12plex. So anything more than one unit is multifamily. I've been in that for about 15 years. In the last 4 years, the equation has changed. Lots of syndicators like me have come, new ones. As a matter of fact, my brother, a very good friend, Neil Bauer, said that it's 1,000% up. Syndicators went from 1 to 1,000% up in the last 2-3 years. That has hurt the industry in the sense that they were overbidding. And with the interest rates going where they are, but what has happened is now there are some troubles in the multifamily space. So at this time in my equation, I am more pivoting into senior living multifamily. So senior living is the silver tsunami, which has really becoming very big now, with 10,000 baby boomers turning 65 every day. And then the second one I really, really have liked in the recent years is after COVID, which was 2019, 20, 21. Now it's 23. The occupancy at the tourist attractions is way high at the hotels. And also the ADR, average daily rates, have also gone up. So I'm really liking these two commercial sectors right now, which is multifamily senior livings and also hospitality hotels, name brand hotels.
Very good. So guys, just so you know, I would probably ask more questions like, okay, like on your senior assisted living, what does that look like? Where are your locations? Where you're looking at? Where's the demographics going? And then I'd probably dive into like, all right, who's managing the operations of this and those type of questions. But for this purposes, we're kind of going over the 10 basic questions, but obviously there's a lot more you want to know. Okay. So, Vinny, my next question is, I went on your website. I see that you've owned a lot of different properties. Can you kind of dive into what your track record is over the last 15 years?
Surely, Beau. Actually, I've done close to 40 syndications. What that means is 40 different assets that I have purchased with my teams of people. I've had 2 companies, Ideal Investment Group, then Monil Investment Group. And the good part is I started from a duplex, and then 14 units for 180,000 to 60, 64, 109 units, 160 units, then 200 units, then 365 units, all the way from 180,000 to almost like 52 million was 63. I just bought 63 million right there in Houston last year at the Med Center with my partner. So essentially what we do is we have close to $1 billion in all the AUM, we call it, AUM, our assets under management. There we go. We used to have 158 people in my management side of the business when we had lots and lots of multifamily properties in Texas, in Georgia, in Florida, and I'm opening up now. I just got the pictures yesterday of the Hampton Manor in Williamsburg, where the landscaping is done and we are ready to, do the inspection and open it up now. Over there, we opened up in Punta Gorda with a senior living, Cape Coral. I bought a property over there in Tennessee. Recently, I'm just saying recent ones. We are selling the property in Princeton Park, it's called, over there. We just sold the one in Orlando, 52 million, sold for 64 million. We had one property we purchased recently with my partner, 50-50 joint ownership, was the one in Austin, Texas for 34,750,000. All these are there. And if anybody wants to know, just send a DM me or call me, because we don't put a lot of these floundering things on our website. We only, talk to the investors. We have actually set investors, 580 investors who have been playing ball with me, and they have closed the cycles and everything, and I've made multi-millionaires out of them. With their help, I'm able to buy so much. So I just raised, it's just mind-boggling to me. I can raise millions of dollars in few hours.
No, that's good. That's good. And then another question. So how do you find these great opportunities? What's your, I know it's probably evolved over the years, but today, how do you find the best deals and the best partners?
I'm so glad what you're saying. Finding partners is very difficult. I want to say that. Their integrity, their background, if you're, in the same vision to keep the investors in the forefront, are you able to, meet with them at the right times? Are they putting extra effort like you are? All those things are very, very important. So in my whole life of 16 years now, I've had only 3 partners. What? Just 3 partners. And the thing is, I am very particular. My whole family, we are a boutique multifamily syndication company. We are not that flagrant or anything, just family business. What we have found is our investors also like their privacy, fully privacy. So nobody knows about them except for my daughter, my wife, and I. And we just send them. We never did a webinar ever, and we just send them the package. They know that Vinny, when he does underwritings and everything, they're conservative. When I'm providing them the numbers, they believe in them. And then they go ahead and say, okay, put me down for 250 or 500 or million or 100 or whatever. The good part is I want to share with everybody, I've been collecting last 16 years, 98 to 99% of the commitments, which is unheard of in the syndication industry. When people say, hey, I need 5 million, and everybody says, get a commitment for 10 million. Not in my case, because my investors are savvy investors, accredited investors, rich people, and they love, when I put some things like hospitality. I'm just throwing it. I'm 100% closing. I just told my 3 friends, and I've got 2 of them wiring 500,000 and 250 today, 750,000, So anyway, I don't know if I went into tangent, but how do I get these deals? Brokers, relationships. It's so important. I'm a broker in California myself. Beau, you're a broker over there, bro. The key thing is that, you talk sense. Brokers really like to talk to people who talk sense. and they have the equity they can raise and also the loans they can qualify. So those are the two big things for any real estate broker. Once you get established that, hey, you're a performer. And by the way, in my case, I have closed on every single deal in 15, 16 years from letter of intent to purchase, 100% record. So, which is very good. I believe, I feel very good about it. Once I underwrite the property, once I know this is the property I need, and with the LOI, I send the approval letter from the GLL or Northmark or, other broker, Meridian like that, we have intact the loan before the LOI goes in. So I have certain, different ways where brokers love Vinny Chopra and they like to give me the deals, off-market deals. That's where I've not done a single direct campaign ever to the sellers, ever. But I like to, again, deal with the brokers, listing brokers, not buyer's brokers. That's the other part, because I believe in the listing brokers are very next to the seller, and I come over here next to the listing broker. Now the listing is a dual agency. It's called listing and buyer broker together. They know the temperature of the seller, and they can tell me what's the best price I could buy it at. And if there is a negotiations, it's much easier. Long answer, but sorry.
No, that's good. And so what, now all syndications are different, right? And so there's different investment timelines, but typically when you're going into an acquisition, what is the range of time that an investor would anticipate having their money tied up in this particular syndication?
Totally. See, most of the syndications go from 3 to 5 years or 5 to 7 years hold, they call it. In other words, once you put 100,000, 250, then maybe after 3 years, you could ask if somebody can buy it out. The LLC has the first right of refusal, we call it, or you could get another investor to cash you out. The other part is that the money is deployed when the transaction gets completed. Other words, like when I put in LOI, it takes about 30 days, 25 to 30 days for due diligence, where we are able to find out if there are any defects or anything, physical due diligence, financial due diligence, and then we find out, okay, the loan process starts, syndication packets starts with every single, syndicator, attorneys are paid and everything so that they can start working. Usually we have been closing within 60 days. What? From the execution of the contract till the closing date, 54 days comes to my mind, 56 days come to my mind. The Austin deal we closed in 56 days. So it's 60 to 90 days that we are able to close the deal. And then from that point forward, it depends on the packet of the syndicator. If they say, would they start accruing your pref rate, we call it, right after the closing of the sale or purchase, or it's going to be 6 months down the road or a year down the road if there is a lot of value add to be put in and all that. I know in hospitality right now, we just decided day before yesterday in our team, we are accruing right from day one. As people are wiring money today, we start accruing their cash flows from today onward.
And obviously, there's a big difference on timeline if it's a stabilized asset or if it's a ground-up development project. So that's you'd want to get into the particulars of the deal and understand when they're going to start paying on cash flow or accruing that cash flow. Is it from day one of the development or is it from when it's stabilized? So then hey, I'm not going to get a check till end of year one because it's a new construction and they're going to start paying then. So very good. All right, next question is...
Can I say something, Bo?
Sure.
Because I think, which I got tied into it too. Please make sure the syndicators or the developers are asking for your money after they got the permits and the loan, construction loan and the permits. I learned the hard way. And now everything I'm doing with the development is not to take the money 2-3 years, and then buy the land and then go through the permits and everything, and people dying and all that stuff in the building departments. So, it's really, really good advice. Make sure every syndication you are putting money with the developer that they have projects, they are already shovel ready is the word.
Very good. The next question that comes up is, what is the risk mitigation strategy? I mean, obviously, in real estate, in construction, in big value add projects, there's always issues. How do you mitigate the risk?
Very good point. Very, very good point. Actually, that's what one has to be looking at: the background, the track record of the developer. Do they have in-house construction company? Do they have subcontractors they have worked with for many, many years? Because all these costs in development, what I've learned in the last 5 years, they can go haywire. With increase in the interest rates, of course, it's not same thing which we used to do 4%, 5%. It's 7%, 9% even construction loans. What will happen after the construction period ends, like 2 years of interest only? Please ask the syndicator or developer company, how will they be able to stabilize the asset which they're building? And then stabilization period, how much money will be needed in marketing, in personnel, everything. I'm thinking about senior assisted living and also in hospitality, because it's just not that when you just open up, you start renting the units. You got to have the ramp up cost, I call it. The big thing I would like to say is mitigating the risk is on their track record. Make sure they have clauses as to how much up and down, the construction can go, because as you know, a lot of inflationary measures are going on 2023, 24. So please look into and ask them, what's the bonds? Bonds are coming to my mind because you don't want any mishap at the property insurance. Of course, land doesn't go anywhere, but once the construction starts, then make sure that the construction companies all are free bonded, and also the developer has full insurances, I call it, and also, figuring it out, what will happen if something goes wrong, if there is an increase in the cost of construction, would there be a cash call or not? How would the mitigation of risk will happen that way? Those are some things come to my mind. Would you add something? Because I know you have gone through, Beau.
Yeah, no, I would just say, listen, there's a lot of variables. So you got to know, like, based on what you're investing in, if it's a development deal, okay, well, are the permits in place? If they're not, what's that going to look like? A lot of times these bigger development deals are phases. There's phase one where they're building, residential condos, and they're building this, and then they're building that on the same parcel. So just understanding these risk variables. You don't want to freely put your money in unless you understand this. So I think this session on the Vinny and Beau show is really just an overview to open up your mind on how you should be thinking going in when you're going to put in $250,000, $500,000, $1 million, and you're basically hands off at that point. You're an LP, you're a limited partner, so you're really relying on that horse jockey, right? That horse jockey has won a lot of races, or maybe they're inexperienced. You got to know what your risk variables are, because whenever there's risk, there's reward, meaning you can make way above average returns on these type of deals, but you got to know what you're getting into, because nothing is guaranteed in life unless it's like maybe federally guaranteed, and that's not even guaranteed. So the next question, so Vinny, what are the fees and costs that I would be, in a typical syndication, and there's nothing that's typical, but what are fees and costs I should look for when I'm investing in different syndications, whether it's yours or somebody else's? Is there acquisition fees? What's usually the waterfall? What are the distributions to the investors? What you're seeing out there, a range that we could look for and know that, hey, they're not charging too big of an acquisition fee or a management fee. And there's nothing set in stone. I know that this is just general, like, help people when they're looking to understand what they're getting involved in, because there are some fees, and you should know by reading the PPM what those fees will be based on each individual syndication. But can you give us examples of what fees might syndicate that go out to the syndicator and what they might expect?
I sure will. But this is a very, very good question. As you know, syndicators get only paid in the front when they close a deal. They are able to fork a lot of money up front, down payments, legal costs, all those things, right? And then maybe in 3 months or 6 months after they're running the operation, they might get a deal to close. So there is acquisition fee, we call it, which is acquisition and due diligence fee is the word for it. Anywhere from 1 to 2% is what we find in the industry. And that is the one to take care of your office, your, expenses and everything, and you're running off the, livelihood, whatever it is, right? The other fee is the loan guaranteeing fee, which is you're putting your neck on the line for getting a sponsor, outside sponsor, or if you have your own net worth that high, you're putting their neck on the line for a big loan and not to do foreclosures or anything, if something happens. So that is another fee. Some of the syndicators charge 1 to 2% on that one also.
And that's usually, would we call that a key principal?
Key principal or sponsor loan origination. No, not loan, but loan sponsor, we call it. Then those are the two fees upfront, right, as we close. Then after that, there is a waterfall like refinancing fee. Then most of the syndicators charge 0.5 to 1% of the refinancing fee. And then disposition fee is another one, which is again 0.5 to 1% at the disposition, because a lot of things are involved at that end. When you're selling, you're interviewing brokers, you're getting financials ready, a lot of work goes on.
And I think it's important to point out when you get the PPM, this is going to be spelled out, and you should be looking like when does the general partners, when do they start getting cash flow? Does the LPs get paid first, right? Do they get do they get the preferred return? This is stuff that it's not always the same in everybody's syndication. You got to be aware of these things, because really, if I'm investing, I want the general partners to make me my money first before they get a dollar.
100%, like in our hospitality fund, 100% of every dollar is distribution is going to our LPs, our Class A shareholders, we call them LPs, and up to the pref rate. So actually, if it's 7%, 8%, 9%, then all the money, 100%, is going to satisfy that. And then after that, it's 70-30 split. I wanted to mention it. And once we reach the IRR of 14% in our case to 22% at the higher level of investment, it's a 5 or 6 thing for accredited investors only. That's why I can talk about it. But the key thing is that then it goes to 50-50 and all. I do want to say a couple of things. Our investors, when they put 100,000 or 250 or 500,000, their money is making money. The fees that the sponsors get does not come out of their investment. It comes out of the property profits. It comes out of the equity. Or if we are purchasing the asset at a lower value than it's worth, it's that money and the value add and all these things we'll be putting into play. So those fees are compensated later on from those value add measures. They don't come from the investors. That's something is very good to know. In stock market, if you're buying mutual funds and things like that, sometimes there is a load, like 3% load or 4% load. Then your 100,000 is only earning money on 96% of that, 96,000. In syndication world or funds, it's not the same. You are actually getting the benefit of all the money you put in. The other fee I wanted to mention was asset management fee. We didn't get to that. That's about 1 to 2% also, because we want to make sure that the general partners are on top of things, making sure the assets are doing great, making sure that, it's a daily business. I'm in it for 15, 16 years. It's not just like buy something and done with it. No. It's the management of the asset to bring the cash flows and the equity gains. The big elephant is after we purchase the property, and then third party, many times if they are managing it, it's called property management fees. I wanted to mention that also, which could go from 2 to 3%. which doesn't come to the sponsors, but it's given to the third party.
Got it. Thank you. Okay. And then, so there's a difference. Vinny had just brought up about a fund versus a syndication. Totally different. A fund is going to have a kind of a buy box, and this is going to be spelled out on the PPM, private placement memorandum. We're going to be buying hotels, we're going to be doing value add, we're going to buy assisted living facilities or whatever. So you're going to know the general things and buy boxes of this particular fund, but you're not going to have the asset particularly identified at that time per se. Whereas a syndication, correct me if I'm wrong, whereas a syndication is I'm buying 123 Main Street, this multifamily property or this hotel, and you're investing in that deal. So there are funds that you spread your risk tolerance and get a blended return based on the performance of all said assets in that fund. Is that accurate, the difference between the fund and syndication structure?
True. You said it so rightly. Beau, you're right. Syndication specific property, the syndication package is put together, PPM is put together, and the investor's money, the gains and the losses are based on one selected location, that asset class, that asset. In the fund, on the other hand, the money goes on the top from all the investors, and the fund then buys different locations, different asset types, just like you said, and different, cash flows. Each LLC under the fund is operated separately, and the profits go to the fund, and then the fund pays the investors. So there is less risk to, put your money in a fund structure. Great tax benefits also, because now you got cost segregation coming from several properties, not just one. So in the fund, it could be very big number, negative number coming in the K1 for the investors. It mitigates risk. It gives them diversity. It gives them diversity of class of operations, different commercial types and locations. So it's almost like a REIT, small REIT, I call it. And it's a much healthier to invest in a fund. Now, some funds say, oh, we have 2-3 things we are working on, right? And then they'll be able to deploy the cash right away. Like in our case, in hospitality, we got 12 to 13 projects, which are already ready. So as the money's coming in, trickling in, we are deploying it, and we are accruing the cash flow for investors from day one, in our
Very good. Okay. Let's talk real quick about what a limited partner or potential investor in syndication or a fund structure. So talk about exit strategies. What are the planned exit strategies? Will they sell the property? What happens upon refinance or long-term hold? Knowing the intentions of when I might get paid back, right? And what is the strategy? So let's just say it's a development deal. And it's a syndication, and so you're doing ground up and you're building a hotel. So you're going to have a little bit of negative as there's no cash flow during construction, right? But some funds could elect to pay distributions during that point. Some of them say, hey, year one, we'll start paying. But upon stabilization of this asset, right, in the private placement memorandum, there could be some that we may sell, we may refi and cash out. How do they look at that? Like, hey, depending on the economy, depending on exactly when it's stabilized, when can I get the return of capital? And can you kind of walk through on a syndication, like, hey, we surpassed our expectations, we stabilized it quicker, values on these type of assets have, gone up tremendously. It's a hot asset class at the moment. We can refinance. Would I get paid, maybe a partial paid out of my investment, and then still retain the same ownership in the syndication?
Yes, definitely. I'm so glad. This is a very, very good question I get asked many times. Beau, you're right. So what happens in a development project, as though it's land, like, and then tractors are there and start to build. Let's see, in 12 months or 16 months, it's fully built now. Before it's opening for occupancy, we call it, in hotels or senior living or apartments, you got to have the leasing started about 3 months before, so that we are able to start occupying at a higher number. Occupancy goes up. Now the value of that asset goes up as the occupancy goes up, and we call it stabilization period in hospitality, hotels or senior living, 9 months to 12 months. Now we are at 70%, 80% occupancy. The value of that asset has gone so high, we look for refinancing the loan. It's called refinancing. We want to pay back the construction loan, finish it off, and now get a permanent financing, we call it. Now there is a bigger chunk of money coming in rather than what we have to pay for the construction side, because the value has doubled, maybe, let's say. That money, any extra money through refinancing, 100%. I hope everybody looks into those PPMs. 100% of that money needs to come back to investors, the limited partners. Zero money should go to the general partners. Of course, if they are paid with that money that they got, refinance money, all the capital back, whatever is left over, then they could do 70-30 split also. I've done it in the past.
And that's going to be all different in PPMs, people. So you gotta pay attention to that. So Vinny, okay, so we're stabilized. We doubled the value of the property. I initially invested $250,000. Let's say you're able to pay me back my $250 year 3. And is this going to be based on the PPM specifically about what happens if that occurs? Because now I have zero money in the deal. Do I still have that same percentage ownership, or what would that look like? That's
the beauty of it. We talk about this as infinity percentage returns. Sometimes people say, oh, we gave the money back 100%. The investors can use that money to invest with the same syndicators or operators or somewhere else also, but they still continue to have a percentage ownership in that project. As the assets sell, that syndication asset sells, they will get the capital gain of that deal also, because they are still legally owners of the percentage ownership until the product sells or the property sells. And in the fund also, it's the similar way. Their ratios will be staying the same, and as the properties are producing cash, we'll be giving cash flow, even though they have zero money left in the fund, but they will keep on getting cash flows. That's why we call you get infinite.
From that point. But is that specific to what you're doing, or do all syndicators do the same model?
That's a good question, brother. I know a lot of syndicators stop giving cash flows. But in my case, over the last many, many years, we have kept on giving cash flows over and above, because even if there is zero money in the deal, they still get the cash flow and then the equity gain.
So I think, so that's an important part. There could be differences in these PPMs. So that's why I'm asking these questions, because you want to understand, because what has been done in the past might be not the same thing on future deals. There's different type of asset classes, which they have different structures. So getting in and asking these questions and getting the information from this syndicator is very crucial. We're coming up to our time constraints, so let's kind of jump into our last couple of questions. Another big thing to ask is, okay, Vinny, this all sounds great. Now, can you talk to me about, I know I'm a limited partner, so I'm not really I'm pretty passive, right? That's why I make a lot of money as a doctor. I make $2 million a year as a surgeon. Or I don't have time, but I do want to know what's going on with the project. How should we anticipate a syndicator to communicate to us so we're not having to call them and find out what's going on? What are some processes you have in place to keep people abreast, keep your investors abreast of what's going on?
Thank you, Beau. I know in my last 15, 16 years, I used to do lots of quarterly meetings, live Zoom meetings, invite the investors in the evening because most of them could join, record the seminars, and then send the link back to all the investors who were there and those who could not attend. But over the years, the time has become a big factor. Now there are investor portals. And in the investor portals, we are able to upload updates, quarterly updates. A lot of our investors don't like a monthly update. It's too consuming time-wise and everything. So we give quarterly. And also with development projects, we are planning to put drone footages so that our investors can almost see it right there in real time, what has been going on through the videos. So please ask the syndicators, how would they be communicating to you at the portal level? I know when we do it at Appfolio or our other portals, and now we have Invest Next also, as soon as we update, we send a email out to the investors so that direct them back to the portal so that they could see what is the progress. The other part is the tax documents, their PPMs, everything is all organized now on the investor portal, which is very secure. That's
Oh, great. Next question is, so, Vinny, I just learned about you through social media, or I learned about you on a podcast. This all sounds great. I don't really have a personal relationship at this time. I'm accredited, here's the proof. I'm the real deal. I want to invest with you, but I would like to speak to one or two of your investors. How would you introduce them? I know, listen, people, somebody like Vinny is probably not going to want to say, oh, here's my 580 investors. But, if you're if you're an investor and he feels you're sincere, hey, Vinny, I like what you're doing. Can I speak to one or two of your investors? How would you position that? Because I think it is important because, hey, everything you told me today, I'm excited. It sounds like I'm going to make money. But I always think I call this validation. In the franchise world, we call it validation. I want to talk to somebody who's been invested with you for a few years, and find out a little bit more. Yeah.
Because, nothing is hidden. And you should be asking that of the syndication group and, look at how many people are in the principal right on the top, I say, and meet with or even talk to, on the phone with some investors of theirs to see how their feelings are. Or I know in my case, I don't bother them too much. So I have asked them to give me some comments. And of course, their phone numbers and everything is there. If anybody would like to ask that, I provide it to them. Definitely.
Yeah. The last question on this and there's lots more questions, but I just want to give an overview of questions you want to start with. Alignment of interest. A lot of people go, well, hey, Vinny, you're raising all this money, but what skin in the deal do you have? Like, are you putting money in this deal? What would make me as a limited partner, like if shit hits the fan, right? And there's a problem, you have no money in the deal. I don't know if you have a personal guarantee or not. Like, what's going to give me that reassurance that, hey, this guy is going to see this deal through?
Very good point. Very, very good point. Well, again, the key thing is please look at the strength of the syndicator as to how many assets they have and do they have good nest egg, their net worth. Everything is very, very important. Yes, I do also go in as limited partners into deals, our other partners to also invest. The other part is we have to guarantee many of these loans. Only the Fannie Mae loan and Freddie Mac loan, CMA's loan, they are non-guarantee loans, but other construction loans are always, I think, guaranteed loans. But our neck is on the line. Our investors is, of course, putting 100, 250, 500 million or like that. But our neck is on the line for $20 million loan, $50 million loans. And, so it's a big, burden on us to perform, to make sure that all the T's are crossed and I's are dotted, because anything can go haywire in a purchase, And one syndicator should also have the cash to be able to put that into the property. Like, for example, I have lent, I think, $1.75 million, my own money, into my senior living projects, 1.75 to even 3.5 million, I think, of our own money right now. And as we sell the assets, we recoup it. But I've given that money for the last 2 years at zero interest. That's just ridiculous.
Yeah. Okay, that's great. So I think kind of rounding out this conversation, which has been really good, and I think we're providing a lot of value to people who are sitting on the sidelines with a bunch of money that are like, okay, like I just am scared that I'm going to put it with somebody or put it into something I don't want to put it in. I think the last kind of question I would ask, and it's not on my questions that I wrote today, but the last question I would ask somebody, I'd go, my last initial question would be, okay, Vinny, like, look, you have 39, 40 successful syndications that have exited out of, or, whatever that number is. Tell me about a time where the deal wasn't going well, because let me tell you something, and how did you fix it? And you kind of just mentioned it because you put money into a deal, $3 million, but tell me either that example or another example of like, hey, sometimes, life happens and the deal doesn't work. The contractor runs off, COVID happens. There's going to be problems, people. So this is really where I think is an important question, because it's like, well, what happens if shit hits the fan? And give me an instance of this and how you were able to solve or correct the problem.
No, thank you so much. I know out of 40 deals or so, I think we had one deal over there in Lake Jackson area where we put so much efforts in everything and value add, but then the market turned south. So we had to sell that property at a small loss, right? So people didn't lose all the money, but they lost maybe I would say 23% comes to my mind, or 40%, but I have made so much money. On other deals, they were happy that, only one deal got sour. I know one deal you helped me out in Atlanta area. I remember that was the one where the Fannie Mae came after us and they wanted to call the loan, let's say, because I had sold that property. I had to get $8.5 million loan, and you gave me, and I got me that in 15 days, and we were able to save the day on that one. Some other things come to my mind. Contractor, I know in one property in Texas where the contractor didn't do a good job, I took them to court and we mediated it. So a lot of these ups and downs things happen, but you got to really make sure that the sponsor like me has the investor's interest foremost. That is number one thing, totally the number one thing. That's what we are looking at now in some senior livings right now, where because the cost has gone up 30%, the interest loans and delays and everything in development, my partner and I have said, we'll make zero money. We don't want to make any money over 3 years and make sure that our investors get paid, their principal back plus the interest or the returns that we promised them. So that's our number one thing,
So there you have it, guys. And I wanted to point that out because it's very important. Like, listen, nobody bats 1,000 when they're going up to bat. There's going to be times, right? You want that person that goes up to bat, and usually they're going to get a single, double, triple, and sometimes they even hit home runs or grand slams. But the fact of the matter is, sometimes you're going to have these problems that come up, and you just want to be on the same boat with somebody that's going to, make sure your life vest is on and you're going to see the highs. So anyways, I hope you guys found this episode really good. I wanted to kind of dive deep into it because I think a lot of people kind of skirt the issues. I think Vinny's very transparent. He's obviously not saying, hey, there's never problems, there's obviously problems. There's obviously
lots and lots of them,
right?
And again, keeping the interest of the investors intact. For example, we just canceled the contract because this buyer who gave me good money for Knoxville property, he wanted to retrade by about $2 million. Are you crazy or what? So we just terminated the contract, and now the broker is going after the other people to get us 4 offers, maybe even better because the NOI has gone up at that asset. Very good thing that we just had a attorney's meeting this morning. That's what I'm dressed up today in a little bit, because this is another one we are trying to sell, and this buyer is just kind of ramming through their way or the highway. We have to really make conscious decisions, and meet with the attorneys and everything to make sure that we are not just getting rolled over. We want to make sure that we close it on time and not to have, get us tight with the purchase of the property for 6 months or 8 months like that. So those things are very, very important on a daily basis in any syndication, any fund manager's life.
There you go. So, guys, you see, it's not all glamorous for Vinny, and he's not traveling the world. Like, he's got, there's real-time problems. And it's really, you want to work with somebody that's, solutions-oriented, that's going to get to the finish line no matter what, got the bandwidth, got the capability. It's not their first rodeo. They're not in over their head. They've got the bandwidth to fix problems. And that's essentially what I want to get at. But I think we did cover a really good, hey, I've got money. I've never invested in a syndication or a fund. This is kind of a really good overview show. I think you can dive deeper in all these things to explore further, obviously, but I wanted to do a show just specific to that.
So that'll be fabulous. Thank you, Beau.
Thanks, everybody. We'll see you on the next video.
So happy to be on your show finally.
I'm a long-time fan, and I watch all your guys' content.
It's awesome. We're very, very, very invested in our community.
It's wonderful to be here.
This is Vinny Chopra and also my good buddy, Beau. And we are so happy.
It's amazing what's going to happen. So, we ramped up to do the show, and we got a lot of hype about the guest today, so I'm excited.
I know.
So excited to come live to you all. You live 9:30 every Friday. How to take your business to the next level.